I think crypto, if in my opinion, is really watching this huge move in precious metals. There's a lot of FOMO for crypto traders, and I think they're actually buying metals. But in the past, these large moves in gold have actually been a precursor to a subsequent move in crypto. So I think part of this is we're seeing a big move in sort of non-US dollar assets, and that follows with crypto.
Gold and silver have delivered some of the most eye-catching returns of the past 12 months, particularly in the current year. Gold is up roughly 17%, while silver has surged more than 50%. A performance profile that has captured attention across institutional desks, retail communities, and even speculative corners of the internet. According to Tom Lee, the difficulty lies in pinpointing a single driver behind this move, because several forces are acting simultaneously. Before we go on, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more content like this. Every action helps with the YouTube algorithm and greatly supports the channel's growth. Thanks for your support and enjoy the video.
Tom Lee, what say you? And how does this play out? Is gold overbought here at $5,500 an ounce?
You know, gold and silver have been two of the probably most eye-popping trades over the last 12 months, and especially this year. It's hard for me to say how much of that is currency debasement versus investor demand versus price simply driving more demand. As you may or may not know, like some investment funds in China have like the silver ETFs actually trading at huge premiums. So I think it's really eye-popping, but I might just say it might just be a lot of price momentum too.
And we've seen momentum here in precious metals, but not as much in the cryptocurrencies. And so how much of this has been a rotation when you look at some of the recent weakness, Tom, in Bitcoin?
Yeah, crypto's been a huge disappointment because, you know, whether it's debasement or geopolitical uncertainty or central banks easing, those are tailwinds for precious metals. It really should be a tailwind for crypto. But I think crypto had suffered and still hasn't recovered from that October 10th deleveraging. So you've seen the crypto market trying to recover. And in fact, early this year, there was probably some momentum until the whole Greenland Surprise, and that caused another round of deleveraging. So I think crypto, if in my opinion, is really watching this huge move in precious metals. There's a lot of FOMO for crypto traders, and I think they're actually buying metals. But in the past, these large moves in gold have actually been a precursor to a subsequent move in crypto. So I think part of this is we're seeing a big move in sort of non-US dollar assets, and that follows with crypto.
Joyce, I see you nodding your head.
Yeah, so, I mean, we've done some work looking at where gold prices could go, and just half a percentage point increase in the gold allocations by private investors means gold at 6,000. So if you look at private investors having about 3% in gold, if they went to about 4.5%, I mean, you could really be looking at, over the next couple of years, gold at 8,000. So part of this is demand for diversification. It's also that you have gold demand coming from many different pockets, private investors, as well as, you know, emerging market central banks.
And of course, we see.
And Morgan, you know, there's been a lot of increase in industrial metal demand as well. It's not just gold and silver. We've seen copper, we've seen zinc, we've seen all of these metals move. Part of that could also be because of this huge drive into data centers and the need for electricity, which could be not just a currency play or a dollar debasement play, but it could also be a fundamental play as well.
These two precious metals have been the star so far this year. Gold is up 17% and silver is up 52% so far. And I can think of 4 reasons why precious metals are doing well. There's a lot of geopolitical uncertainty. We know central banks are dovish. There has been currency debasement, especially the yen and dollar. And to give you an idea, look at the JGB 10-year yield versus gold, and you can see it's almost the same chart. And there's been price momentum. In fact, on Reddit, Wall Street Bets, top trending stocks are silver and gold. Now, you'd think, well, why doesn't this apply to crypto? Well, geopolitical uncertainty helps crypto, and central banks dovish helps crypto, and FX debasement certainly helps. But there hasn't been price momentum. And I think one of the reasons is crypto just hasn't recovered from the October 10th liquidation event. And I think that takes time, but it's going to happen. And in the meantime, crypto fundamentals are improving. So as fundamentals go up and to the right, I think it's just a matter of time before price follows. And as we think about earnings season broadly, for the S&P, 14% have reported, 78% are beating, which is pretty good, beating by roughly 5%. We are in the second heaviest week of earnings season this year. And this week, especially Wednesday and Thursday, 4 of the 7 Mag 7 report. And I think the takeaway is still going to end up being that earnings growth is accelerating this year. So it's all a good news story.
Zooming out beyond metals and crypto, Lee highlights encouraging developments in equity markets. Early earnings reports suggest that growth is accelerating, with a strong majority of companies beating expectations. As the earnings season intensifies, particularly with major technology firms reporting, this trend could reinforce confidence in risk assets more broadly.
Like, what are people missing? Like, why are some people still so bullish on it and calling for a super cycle, and then other people are bearish on it? Why am I bearish on it? The reason why I'm bearish on it, reason number one, is because this cycle length, cycle 5, lasted right in between the length of the last 2 cycles. The current length of this cycle, when it peaked at October 2025, day 1062, the day before, the cycle before that, 1059 days, the cycle before that, 1068 days. So in terms of cycle length, the length of this cycle, the last cycle, was literally basically the same length as the last 2 cycles. So that is reason number one for why Bitcoin's price is dropping, is because simply the cycle is over, and instead of being in a bull market, we have transitioned into a bear market after the cycle top. This purple line following the other bear market years. And every single bear market that Bitcoin has had, all the one-year bear markets, basically started in Q4 of the post-halving year, or post-election year, if you're not familiar with that jargon. So if you go look at all of these tops, you have Q4 of 2013, you have Q4 of 2017, you have Q4 of 2021, and then you have Q4 of 2025. So the reason Bitcoin is dropping, arguably, is just because this is when it always drops. It always tops out in the fourth quarter of the post-election year. And why should this time be any different? A lot of people assumed that this time would be different because their altcoins had not yet rallied. But that is not a valid reason, right? Bitcoin, if altcoins did not rally when Bitcoin did, that is not Bitcoin's fault, and it's also not a reason the bull market has to continue. So the reason the price is dropping is just, frankly, we are in a bear market, and frankly, this is always when Bitcoin is in bear markets. Where people are getting hung up on this idea is that there's a lot of different indicators that never actually triggered this cycle. If you look at, say, like the Pi cycle top, it did not trigger this cycle. It didn't even come close to triggering this cycle. But guess what? It also did not trigger in 2019 either. And you guys know, we've talked about that comparison so much. So much. We have talked about that comparison. We have made this comparison over and over and over again. And the reason is because Bitcoin did not top on euphoria like metals are about to do. They're topping on apathy. And when you top on apathy, you get a slower, gradual decline for a while because you don't have all the retail that FOMO'd in at the top. You just have people selling based on time-based capitulation, not because they're sick of seeing the price down 70% or something. So, in this case, how do we make the comparison to 2019? How do we do that when it topped in the fourth quarter of the year? If it topped in the fourth quarter of the post-halving year, shouldn't we just compare it to all the other times? No. It's one great comparison, but it's not the only comparison. We have to look at the top in 2019. Why do we have to look at the top in 2019? I'm glad you asked. It's because 2019 is the only time in history where Bitcoin topped on apathy rather than euphoria. And when it topped in 2019 on apathy, there was also no rotation into altcoins. If you look at Bitcoin and you overlay total assets held by the Federal Reserve, one of the things you'll notice is that back then, Bitcoin also topped a couple of months before the balance sheet of the Fed started to expand, just like this time. So there's similarities between the normal end of the 4-year cycle and the end of post-halving years, but there's also similarities through the lens of monetary policy, where there was no rotation to altcoins. There's so many people out there that keep saying the cycle has to go on just simply because we didn't have euphoria and because the altcoins they shilled to their audience didn't rally like they thought they were going to. Guess what? They also didn't rally in 2019 either, and we're in that slow, steady decline, just like we were back then. It's basically the exact same thing. It's just that the steady decline that we had back over here in 2019 is similar to this one, right? So the decline ends up occurring at the same time that most bear markets occur, starting Q4, the post-halving year, and then going through the midterm year. So I'm saying that this downturn here is similar to the downturn we had back over there. And when you compare that through that bear market lens, and you look at the 2019 bear market compared to the current one, they look pretty similar, right? Like they just slightly lower lows and slightly lower highs. So when I look at the price of Bitcoin and I see it doing what it always does, right? It rallies, it puts in a lower high, and then it drops even more. Also, remember, every few years, Bitcoin likes to check in with its 200-week moving average. Every few years. So that's probably what's going to happen again, is my guess. Now, you might say, well, hold on a second, Ben. The stock market has been going up, so why can't Bitcoin? Well, in 2019, the stock market continued going up, even after Bitcoin stalled out. You could argue that when you're in a risk-on environment and you have excess liquidity, crypto does really, really well. But when you're in a risk-on environment without excess liquidity, crypto starts to drop, even though the S&P can go higher. I actually added, we have a new chart here on the website, which I've talked about before via TradingView, but it's the central bank's balance sheet. Actually, you can just look at global net liquidity. This is basically the global net liquidity represents worldwide net liquidity defined as the balance sheet of the Fed, Japan, China, the UK, the ECB, and then subtracting out the reverse repo and the TGA. When you do that, you get this orange line. Everyone's talking about M2. They should be looking at this. I think about how many people keep telling you that Bitcoin has to follow some lagged version of M2. I told you guys a year ago that was not a good idea. Bitcoin always tops before M2 tops. What you should be looking at is global net liquidity, which is the balance sheet of the central banks. And you can see that in 2019, when Bitcoin started to fade and stocks continued to go up, guess what? We were doing the same thing that we're doing right now after a long drop by net liquidity. We're in that same zone where stocks are still doing well, crypto's dropping. My guess, crypto continues to drop. And you can see it's almost the exact same setup. How do we get out of it? Stocks have to show weakness for liquidity to truly come back in the way that people want. Until that happens, Bitcoin's likely going to keep bleeding against the stock market. A lot of people think that there's going to be some massive rotation from metals into crypto whenever metals top. Unfortunately, that's probably not going to happen in the short term. Anytime gold drops, a lot of times when we see gold dropping like 1%, Bitcoin's down 6%. So it doesn't make sense to go sit in crypto waiting for metals to drop, because if metals drop, crypto likely gets hit harder. That is all why Bitcoin is in fact dropping, right? Bitcoin arguably is in a bear market. It has likely been in a bear market since October. Most bear markets last about 1 year. The other thing to consider is that last cycle, it took MicroStrategy approximately 98 weeks to bottom. 98 weeks from the high that it had in February of 2021. Guess what? 98 weeks after that top would put us in October of 2026. The reason why that's interesting, Bitcoin topped in October of 2025, and the last few bear markets have been exactly 1 year. This was November 2021 to November 2022. This was December 2017 to December 2018. What if this just simply is October 2025 to October 2026? That is what I think. That's the reason why the price of Bitcoin is dropping.
Cowen's final point is about time. Most Bitcoin bear markets last roughly 1 year. If Bitcoin topped in October 2025, a decline lasting until October 2026 would be entirely consistent with history. Supporting this view is the example of MicroStrategy, which took approximately 98 weeks to bottom after its 2021 peak. Applying similar timing to the current cycle again points toward late 2026 as a potential inflection point. This does not imply catastrophe. It implies patience. Bitcoin is doing what it always does.